Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Hi there, and welcome to the final Better System Trader podcast episode for 2017. I'm glad you could join me for this 2017 roundup session where we'll be reviewing all of the special guests we had on the show this year, the topics we covered, and their top trading lesson. I think this is a great way to look back to be reminded of some of the key points, and I know in my case when I was reviewing these, I'd already forgotten some of this stuff, so it was really good to go back over it again and be reminded of some of the things for my own trading. So I'm sure you'll also get some value from this review today and all the amazing knowledge our guests have shared with us this year, so let's get straight into it. We start with episode 67, and our guest was Jack Vogel from Alpha Architect. Jack has co-authored a couple of books, including Quantitative Momentum, a practitioner's guide to building a momentum-based stock selection system. And in our chat with Jack, we discuss, obviously, momentum, what it is, what causes it, the different types that you need to be aware of. Plus, we also talk about how to best apply momentum techniques to a portfolio and why measuring the quality of a trend is so important and how to do it. So what was Jack's biggest trading lesson? Well, let's hear from Jack.
The biggest lesson is that, the more concentrated your portfolio, the higher tracking error is going to be relative to an index. And a lot of times you can look at back test and see outperformance, but you don't see the tracking error month to month, which when you're running live money and it's other people's money and you have to explain that, that can be difficult. So what I'd say is, the more concentrated the portfolio, higher the tracking error.
Our guest for episode number 70 was Rob Carver, who has appeared on the show a few times already. And in episode number 70, we discussed the incredibly unsexy, but incredibly important topic of risk management. And Rob shared with us the different types of risk that we face as traders, including hidden risks that can destroy trading accounts in seconds. He also shared with us what can go wrong when risk management goes bad, and we have some great examples in history to learn from there. We also discuss common mistakes and assumptions that traders make with risk management that can lead to heavy losses. And we also get some tips and techniques to identifying and managing risk. Now, because Rob has appeared on the show before, I didn't ask him his most important trading lesson again in this episode. However, if you want to hear more from Rob, he was also a guest on episode number 26, so you can grab some more there. The next episode we're going to discuss is episode number 73, where we had Art Collins to discuss how he combines simple market concepts to create robust trading strategies. Art also shared the 4 rules of system development to reduce over-optimization, some simple ways to improve the statistical reliability of our strategies, and what traders can learn from Art's experiences being an expert card counter in blackjack. He shares a couple of very interesting stories in this one. So let's hear from Art on his most important trading lesson.
Well, I think you can anticipate that, Andrew. Follow your system. Get it so that you believe in it. Make sure, that you test it according to the prudent rules, and then believe in it. And flip the switch on and get out of the way. And, just if I can amplify that a little more, this may sound like no duh, but we all fall victim to the idea that if we just tweak the system a little bit, surely we can add a little bit of common sense to it, just, a little bit, so that we don't have to go through, the painful drawdowns and stuff. Well, I promise you, if you do that, you're going to wind up with the worst of both worlds.
In episode 76, our special guest was Tan Torelli. Larry has developed a simple, no-nonsense approach to trading, and in our chat he shares the trading insights and approaches he's developed over the past 20 years, including simple techniques to trading and trade management that turned Larry's trading consistently profitable. Also, how traders can overcome the challenges of finding a trading style that suits their personality. Larry also shares the 4 legs of a table approach to trading and why it's so important for trading success. Plus, we also discuss why there is no perfect entry signal and the key aspect of trading you should focus on instead. So let's hear from Larry now on his top trading lesson.
That's a good question. I think the biggest lesson that I've learned is over time, you start to find yourself. And what happens is people get into trade, and we both know people all over the world that trade, different personalities, and people get into trading, for different reasons, not just to make money. And I don't always know if people know when they get in, why they're actually getting in. But I think the biggest lesson that I've learned is to really be introspective and be accountable for everything that happened to me. And once I stopped blaming the market or the Federal Reserve or Alan Greenspan, and once I realized that everything that shows you how long I've been trading when I even talk about Alan Greenspan, right? But just the fact that if I was going to make it, it was going to be I was going to have to figure it out for myself, and CNBC or a book wasn't going to do it for me.
Our guest for episode 79 was Dave Bergstrom from Build Alpha. Dave has spent years researching, building, testing, and implementing market making and trading strategies for a high-frequency trading firm, CTAs, money managers, individual clients, and even aspiring retail traders. In this episode, Dave shares some of his insights into strategy development and validation, including how adjusting the ratio of in-sample and out-of-sample data can lead to creating different types of strategies. He also talks about variance testing, what is it and how it can be used in the strategy creation process. We also discuss E-ratios, how they can be used to determine how an edge decays over time, and you can use it also to weed out potentially poor strategies with good backtest results. We also talk about why volume and volatility are important factors to consider when building trading strategies, plus loads of other ideas to test and validate the robustness of trading strategies. So let's jump over to Dave now and hear what his top trading lesson is.
To test everything. I can't believe anything you hear or read. I have to test it on my own. That and creating realistic expectations. I think I got into it at that kind of age where it was I thought that I'd have a Lambo in a week, and now it's I realize that it's a business, and people work extremely hard at this to compete with me, and it's you have to have realistic expectations, or you'll be in for a rude awakening.
In episode 82, we covered a topic that we don't actually talk about much on this show, and that is machine learning. And our special guest for this episode was Chris Longmore from Robot Wealth, who just so happens to specialize in machine learning and also algo trading and artificial intelligence. And in this episode, Chris shares how machine learning can be used to analyze huge amounts of data, uncover patterns and relationships, and define a trading edge. He also talks about how machine learning tools can be abused and the common mistakes that traders make when they're using machine learning techniques. We also go into strategy validation techniques and how to approach the vast library of algorithms available today. Plus, he shares some interesting insights into why delaying the trading process can lead to opportunity cost and how to know when a model is ready for trading. So what was Chris's top trading lesson? Well, let's have a listen.
Biggest lesson I've learned through trading, that's easy. The biggest lesson is don't believe anything that you read about trading until you test it for yourself, and always rely on the evidence that you've gathered yourself rather than what other people put in front of you. Not to say that there aren't great practitioners out there and people putting good information out there. There certainly are, but it definitely pays to test it for yourself.
Our guest for episode 85 was Gary Hart, the founder of Trend Finder Trading Systems. Gary has had a number of trading systems take out the top spots in Futures Truth rankings, so we discuss how he builds trading strategies that do that, plus we also cover a lot of other aspects of trading too, including the challenges of developing day trading strategies and how to overcome them, the worst time to trade intraday strategies that can hurt performance, why price-based strategies have lost their edge, and how integrating additional data can provide superior performance over purely price-based strategies. Gary also talks about how to construct a portfolio strategies and identify ones that complement each other, plus much more, including overfitting, optimization, swing trading, correlation, market behavior, index trading, volatility, and reusing trading ideas. Whew. Let's hear from Gary now on his top trading lesson.
I think I pretty much hit on that earlier. And, trading per the systems, not per my beliefs. And I guess what kind of goes hand in hand with that, or how I learned that, is that I am not a very good discretionary trader. You might say I'm a horrible discretionary trader. And when I sit there and try to do discretionary trading, or I watch the price action, I think I know what's going to happen. I fall right into the same trap as all the other people that are falling into that trap. So that's where some of the edge comes from with the mechanical trading systems, and being able to test. So, if I'm watching the market and I say, God, it so looks like the market's going to rip up going into the close. Well, now, instead of saying, you know what, that's what's going to happen, let me go buy, because it's so easy to buy. It's so easy to trade, right? So it's like, okay, you know what, I'm going to buy one contract. Oh, it went down a point. Oh, now it's coming back. Okay, let me add another contract. That's the, I think virtually, based on your laughter, I think you can relate, and virtually everyone listening to this can probably relate to that.
Yeah.
So, my lesson now is like, okay, when I see that happening, it's like, okay, let's look at everything. What's some way I can quantify what I see, and then I can test what I see, and then see if it's valid or not. And 99% of the time, it's not valid. Well, I mean, maybe a little high, but it's for the most part, what you see isn't necessarily what's going to happen consistently.
In episode 88, we discussed market corrections with Ivan Hoff, the author of the book Crash: How to Protect and Grow Capital During Corrections. And a few of the points we cover here are some of the warning signs a correction could be starting and how to protect your capital during market corrections. We also talk about the opportunities available in market corrections and how to take advantage of those to grow capital. Plus, Ivan shares how the characteristics of corrections are changing over time and the impacts this could have for future market corrections. Let's hear from Ivan now on his top trading lesson.
The biggest lesson is that different setups work in different markets. The very same setups that can make you a lot of money in a rising market are setups with no edge in a choppy market or in a declining market. So you have to pay attention to your environment. The market plays the music, and when the music changes, you need to change the way you dance or just step on the sidelines, because you're going to lose money if you keep doing the same thing. The definition of they say that the definition of insanity is doing the same thing over and over again and expecting different results. Well, in the market, if you do the same thing over and over again, you're guaranteed to get different results, just because the markets are constantly changing. So that's the thing. Paying attention to the different types of markets is super important. I think the most important thing for a trader. And the second important thing is to look for industry relative strength. There are always industries that are leading the market up and down. And if you focus your trading efforts in those leading sectors, all of a sudden you'll notice that risk management will become a lot easier and trade, and your returns will improve substantially.
Episode 91 saw the return of the always entertaining Laurent Bernieu from Alpha Secure Capital. And this time our attention focuses on exits, including how to classify exits and set them to achieve much clearer, neater, and better trading strategies, plus a simple technique to determine if you've overstayed your welcome in a trade. Laurent also shares the game of 2/3 and how you can use that to determine the length of a time exit, plus much more, including the correct way to think about stop losses, how to deal with freeloaders in a portfolio, and the ultimate entry technique to test you have a robust exit strategy. Now, since Laurent had been on the show before, I decided to adjust the biggest trading lesson question to focus on exits instead, which was obviously the topic of that discussion. So let's hear what Laurent's biggest lesson is studying exits.
Two things. Number one is peaceful. Like once you set the exit plan, then it's peaceful. There's a great book for that, which is The Hour Between the Dog and the Wolf, John Coates. So it's very peaceful. That's number one. And number two, your type of exits, and this is really important when we're talking deep strategy, Your exits will determine your strategy, will determine your profitability. That's a very core point.
Our guest for episode 94 was Kurt Cicada, who has won the World Cup Trading Championships a number of times already. And in our chat, we discuss a mixture of trading topics, including how to include seasonality in trading models and why you don't need to worry about curve-fitting seasonal trades. We also talk about the dangers of counterparty risk and how to reduce them, how to find profitable trades in a crisis, and how Kurt accidentally cornered a futures market and the amusing results. The authorities weren't too happy. So let's hear from Kurt on his top trading lesson.
Get it executed and do the work. I would have to say those are the two. The weakness, two of the weaknesses I see with traders who have trouble is they're not doing the work, or they're not executing. They spend too much time in an analysis paralysis where they're saying, "Oh, there's just one more thing I can try." And basically, once I have a functional model, I'll have my one lots moving, and I'll see how it handles. But I also do beat the data to death before I actually go and make a move. Oh, in the case of a disaster, I've downloaded all the web pages. I've printed them out. I've marked them up. I've gone and put them into a spreadsheet, and I say, okay, this is what I think of the company. So work and execution.
Our next guest on the show was Jack Schrager, who needs no introduction. He's the author of the incredible, popular, and best-selling series of Market Wizards books. Now, my chat with Jack, we had to split over 2 episodes. They were numbers 97 and 100 because we received so many listener questions for him. And in these 2 episodes, he shares a number of nuggets of wisdom, including optimization myths and the relationship between the best performing past and future parameter sets, why you should rely less on optimization and more on developing and testing systems that eliminate hindsight. He also shares why optimization adds very little to the power of a trading strategy and where to focus instead, and also how to properly assess trading results to determine if it's your strategy or the market that's actually any good. And what was Jack's top trading lesson? Well, let's have a listen.
The biggest lesson I've learned, I guess it comes from this number trader said it, but the one who said it maybe most succinctly and directly was Bruce Kovner, and that is know where you're getting out before you get in. So I think that is a tremendous piece of useful advice, and that's one of the main things I learned from doing the Market Wizard books. And why that's so good is because it takes a lot of emotionality out of trading, because you have complete objectivity before you get into position, and you have no objectivity once you're into a position. So it makes sense to decide your exit plan before you get in.
In episode 101, we discussed price patterns and how to trade them with Brent Penfold, who is also a repeat guest on the show. And in our chat with Brent, we covered why it can be better to focus primarily on price instead of a collection of indicators, and how to identify patterns in price action. We also discussed how a universal dataset can lessen the risk of data mining, the dangers of trading stocks and why futures are a superior trading instrument for active traders, and how to blend individual systems in a portfolio to produce smooth equity curves. Now, Brent's top trading lessons are pretty short and simple. Let's hear them.
Money management, money management, money management, risk of ruin, 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 risk of ruin. Being the best loser, be the best loser, be the best loser, be the best loser. Lose often, lose small, just get over it. It's just, it's all about managing your risk.
In episode 103, we saw the return of John Ellis, who has been on the show a number of times before, and this time he shares with us a brand new indicator that he's developed that minimizes lag, is very responsive to the market, and gives a fast indication of turning points. If you'd like to hear more about that and download a free copy of the indicator to try for yourself, you can grab that on bettersystemtrader.com/103. Moving on to episode 106 now, we shift our focus to something not directly related to trading, and that was meditation. And we pose the question, can meditation give traders an edge? Our special guest for this episode was Adam Grimes, where we discuss, obviously, what is meditation? Does it actually work? What are the benefits and drawbacks of meditation? And can it actually help traders to become better? And we also discussed how to get started and what to expect. Now, because Adam had been on the show before, I didn't ask him for his top trading lesson this time. But if you'd like to know more about meditation and the impact it can have on trading, this is a good one to listen to. That's episode 106. Our guest for episode 109 was Brian Miller from Optimized Trading, where we focused on how to improve the consistency of our trading strategies by making them adapt better to changes in market dynamics. And in our chat with Brian, we discuss why implementing adaptability into strategy design is so important and some techniques you can use to create adaptive systems today. We also talk about market classification and why it needs to be considered, the types of approaches you can use to classify the markets, and we also talk about how to pursue a multi-model structure that adjusts dynamically to changing market conditions, plus much more. So let's hear what Brian's top trading lesson is.
Oh, wow. Pursue everything to the end. Definitely, if you have an idea, pursue it until it validates with profitability or loss. Never quit something halfway through. Always, because if you don't, it'll nag you. It'll nag you till the day that you die.
I guess though the next question to that is, how do you know you're at the end?
Yes. Well, that's very simple. You either see a good equity curve or you don't. And so, a lot of times, you can usually see if you're on the right track from the get-go. It may take a few small adjustments here and there, but, I think also, when someone has a frame of mind that they think of how they should develop a system. For instance, you see a lot of conditional statements, right? Or filtering mechanisms. So, you want condition 1 to be true, condition 2 to be true, and condition 3 to be true. If all 3 is true at the same time, then you want to buy at XYZ calculation price, right? When, to be honest with you, a lot of times sequenced events are much more robust in nature. Things that happen within a certain sequence or within a certain amount of time or price or volume that may not be true all at once, but they have been true, within the past few days or what have you. So I think definitely trying to, it's such a generic term, but quote unquote, thinking outside the box, but just trying to always push yourself to look at things and perceive things differently, and just pursue it to the end. And if it validates, great, and if not, just start over. Because if you love what you do and you're dedicated, I'm sure like you and I both are, you always have a book full of ideas and concepts to move on next to.
In episode 112, our special guest was Stefano Serafini, who at the time of the recording was the current leader of the World Cup Championship of Futures Trading. He's had an incredibly consistent performance all year, so in a chat with Stefano, we discuss his trading approach, especially around intraday trading strategies and portfolio construction. And some of the topics we cover are how to use filtering on higher time frames to produce higher quality intraday trades, how time windows can improve trading results and what to look for, how to combine multiple strategies into a portfolio and then manage it to keep the portfolio fresh and performing optimally, plus a common mistake traders make with correlations that could give false results and how to overcome it. So let's jump over to Stefano now and hear his top trading lesson.
Not to put too much contract on the same strategy. That's the first lesson that I've learned, because when I start, I had few strategy and I used a lot of contract on each one. So when a strategy go in a drawdown period and it go fast, when you have a lot of contract on it, it's very dangerous, could be very dangerous.
Okay, moving right along to episode number 115, we focus on intelligent trading strategies that maintain themselves. Our guest was David Stendahl from Signal Trading Group, and in our chat we discuss how to build intelligence into trading strategies so that they can dynamically adjust and maintain themselves over time. We also talk about the key to portfolio construction and the major factors to consider for effective diversification. We also talk about why it can be better not to specialize in a particular market, the main drivers behind strategies that have lasted more than 10 years in a market, and how to assess if a strategy suits your personality. Let's hear from Dave now about his top trading lesson.
For myself, it's stick with the system. If it's legit and you've spent the time to evaluate it and, spent a lot of time to design the system, give it time, meaning 10, 15 trades, so that the hard work you put into the system, you have the opportunity to pay out. And if it didn't evaluate well, then obviously you wouldn't be trading it. But if you're going to trade it, stick with the system. And my little phrase is, trade without ego, no emotion, no greed, no opinion. Follow the system and give it enough time to be able to prove itself worthy.
In episode 118, we saw the return of Brian Miller from Optimized Trading, which was really an extension of our previous conversation, combined with some new topics as well. And here's what we covered. The application of game theory in trading, and no, it doesn't just apply to HFT. We also talked about the importance of letting the R&D process guide you instead of trying to squeeze it into a preconceived idea. We also talk about how to balance simplicity with complexity for more robust trading solutions, the impacts of price data evolution on trading model longevity and how to address them. Plus, we also have some questions from listeners. Now, as this episode was an extension to our previous chat in episode 109, I didn't ask him for his top trading lesson again, but you can go back and check that episode if it piques your interest. In episode 121, we focused on volatility and systematic option strategies with our special guest, Luca Giusti from QT Lab. In our chat with Luca, we cover the benefits of trading options systematically, the challenges of testing option strategies and the solution, why volatility is such an important aspect of trading which can't be ignored, and how to factor market volatility into trading strategies to reduce risk and increase performance. Let's hear Luca's top trading lesson now, which is probably one for a lot of us who have been trading for a while.
I think that is to control risk. I mean, I know maybe I will repeat myself, but I think control risk is the priority for every trader. And I learned this lesson after 2008 with a terrible trade on with weeks options, where with the trade that I didn't control, I just eat up 1 year and a half gain working with that same strategy. So that was quite an alert. And since 2008, I really started to focus on how to control risk, and I changed my approach to systematic approach from discretionary approach. And I think the systematic approach is easier to control risk than with a discretionary approach. When you must decide when to exit, you can just put stop loss, but there is always a new reason to stay in the position or to move the stop loss. With the systematic approach, it's a bit different, and you are more disciplined with that kind of approach. It's better. I mean, I prefer that kind of approach.
Yep. Okay. Cool. I think a lot of traders got a lesson in 2008 because I did as well. So, that turned out to be something beneficial, I think, for traders that are still around from then. It doesn't feel positive at the time, but if you can make it through, yeah, you're right. So
that period was maybe the best teacher, the best teaching experience in my life, I think.
Episode 124 saw the return of Linda Raschke, who also joined us as a special guest for episode 49, which was way back in, I think, middle of 2016. In our most recent chat, though, we dive deeper into trade management and exits, including why trade management is such a neglected aspect of trading, how to model different types of exits and the impact of market environments, how volume and breadth measures can give clues to the tone of the market, and how to use the power of relative strength to target the best markets to trade. Now, I didn't ask Linda for her top trading lesson in this episode, but if you want to hear more, check out episodes 124 and 49. There are plenty of valuable nuggets of trading wisdom from Linda in both of those. Moving on to mean reversion now, we had a special mean reversion series with Cesar Alvarez from Alvarez Quant Trading. This mean reversion special was huge. It went over 3 episodes, episodes 127, 130 and 133. And in this series, Cesar shared a huge amount of knowledge covering all aspects of mean reversion. So definitely go check those out again if you're interested in mean reversion. Let's hear Cesar's top mean reversion trading lesson.
One of the biggest lesson I've learned, and I think I've mentioned this several times, is you have to be prepared for that. If you're trading the smaller stocks, Russell 3000 stocks or the Aussie stocks or anything like that, you got to be prepared to wake up one morning with a 50% loss or worse. That is just the name of the game. It's just much more likely to be happening. And, the first couple times that happens to you, it's really hard to deal with. Now, when it happens, I just roll my eyes and continue trading.
Moving on to the second last episode of 2017, our guest was John Carter, where we focused on profiting from market action and pain points. And some of the topics we covered include how anticipating the actions and pain points of other market participants can give you an edge. We also talked about a simple but powerful mental switch that can crush the fear of executing trades. We also covered the subtle clues that tick and volume data give to indicate if a trend or range-bound day could be more likely, plus how to identify potential force breakouts and how stop runs can actually improve your trading results. So let's hear from John now on his top trading lesson.
The biggest lesson I've learned through trading that I've been also able to apply to my own life is to let go of the outcome. Do not try to impose your will on the market or anything like that. Anytime I've done that, it doesn't really work out too well. So, set up your trade and then let go of the outcome and let it play out.
In our final episode of 2017, we have special guest Dimitri Speck from Season X to discuss how to profit from persistent market anomalies, including how understanding intraday behaviors can help you to get better prices and additional edge on trade execution. Dimitri also shares the 4 specific hours of the day that would have given you most of the last 10 years of S&P returns. And here's a hint, it's probably not what you think. Dimitri also shares the one market event that has produced almost the entire S&P performance over the past 20 years in just 6% of the days. We also talk about the challenges of accurately measuring these anomalies, which could give you misleading results. The 3 simple techniques traders of all styles can use to apply these behaviors to their own trading, plus much more. So let's hear from Dimitri now on his top trading lesson.
Yeah, for general life, I think trading is a good lesson because you have to change your opinions. The market is forcing you to change the idea that you have. And this is a good lesson also for life generally, in my opinion, because the market is really a hard lesson. If you are wrong and you don't change your ideas how to trade, then you are out of the market. Yeah, so you are forced to think over your own picture of the market or in general terms of the world.
Whew, okay, so that wraps up another year of the Better System Trader podcast. I know a lot of traders have found value in what we've shared this year, so thanks for all the emails of support and appreciation. I'm glad that what we're doing here has been so helpful. Anyway, enjoy the rest of 2017. There's not much of it left. I hope you have a great Christmas and holiday season and all the best for 2018. It's going to be a massive year. So catch you again soon. Take care. Okay, well that's it for this episode. Thanks for listening. I hope you enjoyed the show. Come on over to bettersystemtrader.com. That's where you'll find all the previous episodes, all the transcribes, all the show notes and all the free weekly trading tips. bettersystemtrader.com.